Real Estate and Mortgage Show, your go-to spot for everything home buying, selling, and financing on News Talk 580 CFRA.
Welcome to the show, everybody.
Yeah, another week.
The very last day of summer. Can you believe it?
Well, it feels very fallish today, that's for sure. It's not warm out there, but beautiful sun, but it's definitely not warm.
Well, and you're celebrating a big anniversary we talked a little bit about last week, eh, Paul? Big 1 month anniversary today.
Oh, yes, without Frank, yeah. You know what? It's funny. This morning I was thinking about that, and I'm thinking about all the amazing things that happened in my life. And, you know, I'm the birth of my kids, the day I met my girlfriend Petra. Like, those are up there in the echelon of, like, my best memories in life. This is a real close second.
And here we are, 1 month though, Frank. Well, speaking of which, Sheri Creese is back this week, president of Mortgage Brokers Ottawa. Welcome back, Sheri.
Happy to be here.
And we have some massive news. Sheri has some massive news. Let's hit it.
Frank, this week, it was announced he's going to be inducted into the Mortgage Professionals Canada Hall of Fame, which is arguably the pinnacle of recognition in our industry. So our National Industry Association recognize a couple or a few people every year in their Hall of Fame, and really people who have built the industry, who have spent a long time on this industry helping others, and we're so proud that Frank is being inducted into the Hall of Fame. He's just an amazing accomplishment.
Amazing. Congrats, Frank. And
well, you said this morning that's equivalent to like someone winning a Stanley Cup, right? Like that's what that is.
Absolutely. Yeah.
Well, that gives us two Hall of Famers in the room when Frank's back, eh, Paul?
That is correct. That's a great accomplishment, and it's too bad Frank's not here to we can pat him on the back. But I'm pretty sure we'll hear about it for about a month or two. So he'll probably sign off every show by saying, "And guys, don't forget, I'm a Hall of Famer. It's Frank Napolitano saying goodbye."
Hall of Famer mortgage agent Frank Napolitano. We're gonna have to change the intros. Everything.
We totally will. He's no longer Frank. He's Sir Frank. First of all. Sir Frank, yes.
That's some amazing big news, but some other big news this week. We got a mortgage rate announcement.
Absolutely. So the Bank of Canada announced, both the Bank of Canada in Canada and the Fed in the States announced the quarter point drop this week, both as expected. I think there was a little bit more question in the U.S. if the Fed was going to drop 50 basis points. Both dropped 25, and everything kind of, progressed as expected. So we get lots of questions about what's going to happen with the fixed rate. And of course, the fixed rate isn't directly tied to the prime rate or the Bank of Canada rate. The changes to the fixed rate, we did see the bond market come down over the last 2 weeks. That was that was in anticipation of the Bank of Canada dropping rates. So those fixed rate prices were already kind of baked in. So we didn't see the fixed rates big drop after Wednesday. But of course, if you're in a variable rate or a line of credit, your rate will be dropping,
coming down.
Yeah, absolutely.
And I think, Sheri, one of the things that people forget about is, it's great for homeowners, home buyers. It's great that the rates came down, so it's a little bit more affordable. Buyers have a little more buying power. Excuse me. But I think what some people forget about too is a lot of businesses live off lines of credit. So this is great for businesses too, because keep in mind some of these businesses, like when you think of electrical companies and window companies and roofs and stuff like that, they have to buy a lot of product and a lot of supplies. Well, what do? They use their lines of credit. Mm-hmm. So now another quarter point drop allows, businesses to breathe. It's only a quarter, but still breathe a little bit easier on some of the payments that they're making. I think people just think of just only homeowners, but you got to think of business owners too.
Home builders, think of Charles at Clement Homes, right?
Well, Charles was saying, I know when we had him on, and he has all this product, and he can, once he sells a certain amount, then he gets his financing. Well, back during when the rates were ridiculous, I mean, his financing was like 7, 8, 9%, and I'm like, can you imagine holding millions of dollars of supplies and properties, and you're at an 8 or 9% rate? Like, that's crippling. So every quarter point helps, and I know that you said maybe another quarter point before the end of the year. I'm hoping at least a quarter point before the end of the year.
Yeah, what's that looking like, Sheri? Is the banks sort of seem to indicate it would look at another cut?
So right now, I think both the bond market and economists are looking. It's about right now, I think today they said 42% of a rate drop on October 29th. I think before the end of the year, there's another Bank of Canada announcement December 10th. So I think most people are thinking at one of those two there will be. But again, after that, probably looking for things to stable out. That's probably where we're going to land. Most economists and conventional wisdom would say that's probably about where it's going to be.
Well, that would bring us down to 2.25, potentially maybe 2, which is where they say is kind of the sweet spot. Like between 2 and 2.5 is where they really want to be. And right now we're at 2.5. So we get another quarter point. We're down to 2.25, which is probably right in the middle of where they really want to be.
Absolutely.
So, yeah. But I tell you what it does to the real estate industry, and we're starting to see a little bit of it right now, is just the optimism. Like people are like, okay, a quarter point. And there's some buyers that are sitting on the sidelines. That quarter point now puts them into the game, right? Just that quarter point. So we're starting to see some more first-time home buyers come off the shelf. Especially we've talked about the last couple of shows, we've talked about all the different programs for first-time home buyers. Right. I think we're in the final reading of the GST rebate, GST elimination for first-time home buyers on brand new homes. So that's in the final reading. So we should get something there. That's another program for first-time home buyers. And then you couple it with this quarter point drop. It's attractive now. It's starting to become attractive. And before the end of the year, if we get another one, I think we're going to start seeing a lot of buyers who are sitting on the sidelines get back into the market.
Sheri, what are you hearing from your clients? Like, how are they feeling? What kind of stuff are they asking you about rates and where to go? Fixed, variable,
Yeah, so I think everybody is, kind of looking at what's right for them. And I was just reading an article this morning, in fact, that said it takes about 3 years for people who perhaps maybe had a variable rate mortgage for them to consider if they've been in an environment where a variable rate might have had increased payments for them or increased risk. Takes about 3 years for the whole market to change a little bit, their perception of it. At the end of the day, it's what's right for you, as I always say. But the variable rate absolutely gives you more flexibility. And certainly, even if it's not because you're banking on rates dropping, I think it's more about, the average mortgage actually gets to 3.8 years, not 5 years. So if you're someone who, for whatever reason, needs to get out of a mortgage, a variable rate is a more flexible option because getting out of that rate is less risk and a lower penalty.
Well, and keep in mind, there's a lot of people getting out. We've talked about this before, like the divorce rate here in Canada, in Ottawa, is you're 50, 60%. So there's a lot of times people have to get out of those mortgages, and good luck trying to get out of a fixed rate mortgage. The penalty is crazy, whereas a variable, it's just 3 months interest, which is a lot more palatable. And they're now neck and neck with each other, right? Like you can get a variable for 4 to 4.2, and you can get a fixed between 3.9 and 4.2. So you're pretty much neck and neck which one you pick.
Yeah. So it's whatever you feel comfortable with, really.
On the Mortgage Brokers Ottawa site this morning, fixed rate at 3.99, 5-year fixed, and 5-year variable at 3.79.
Oh, there we go. That's a very attractive variable.
High ratio.
Yeah.
I'm going to say high ratio.
Right.
So we want to make sure that we're showing we do have those options, but definitely high ratio. We have those. So
that's one thing I like about your guys' website is there's no bait and switch. It's not like, oh, the rates are 2%, and then you call, they're like, oh, but that's only if you're 6'4" and 142 pounds and blah 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 blah.
With $10 million
with $10 million in the bank, but you know what? We're really close. We're at 4. How's that? You do have some of those bait and switches out there.
Yes, and we also try and so there are some lenders out there that offer some really low rates, but we know that they may not ever. Some certainly during COVID and times like that, there were some that had super low rates, but if you put a mortgage application in, they wouldn't come back for 3 weeks or 4 weeks because they were so busy and unable to handle it. So those rates we don't advertise typically on our website either. We don't want to kind of give a false pretense there too.
But even now, and I know Frank's talked about this a lot, you used to be able to, back in the day, what's your rate? Oh, this is my rate. Whereas now it's like, well, it all depends on your situation, how much you're putting down, your credit, your this, your that. There's no cookie cutter fit in this box rate for everybody. So it's like, well, here's kind of where we are, but give us a call. We'll assess your personal situation. Then we'll be able to tell you what your rate is, right?
Absolutely. Yeah. We actually have a full-time person who all they do is put rates into our rate system. And right now we have somewhere in the neighborhood of, definitely over 5,000 rate combinations in terms of lenders and, is it 30-year amortization? Is it a rental? Is it, there's so many combinations, and to date, we're the only system I found that is 100% accurate.
Well, and that's what you were saying before, the right product for the right client, right?
Absolutely.
And that's the best way to go.
Before we go to break, is Frank back next week? I just have to, I want to prepare myself now. I need a week of preparation if Frank's coming back.
I don't know. Be careful what you wish for. I have no idea.
Damn.
521-TALK, 521-8255. We'll be right back. Welcome back. Just before we go to the phones, just wanted to mention, everybody, a lot of times people are a little bit nervous to call in, maybe don't want to necessarily share their name and some financial information on the air. We've actually set up a webpage to allow people to submit questions, and we'll read them on air on the next episode. The website is realestateandmortgageshow.com. So if you want to go to realestateandmortgageshow.com and submit any questions, we'll get to them on the very next episode, so you can tune in then.
Well, we did that too because we found that people they don't want to call in on the radio. Like I've said to someone, I've talked to them during the week. They're like, I said, that's a great question. Why don't you call into the radio? I'm not doing that. I'm not calling on the radio. And so we make it easy now. So if you want to go to realestateandmortgageshow.com, submit whatever question you want. We'll read it. We'll read it on air, and we don't have to say your name or anything, and we'll actually answer that question for you. The beauty is too, you can actually watch these episodes on there too. So if you realestateandmortgageshow.com, submit any questions, watch the episodes, and
you can see how good the MVPs look on camera.
Yeah, sure.
All right, now speaking of which, we do have a caller. We've got Linda calling in from Ottawa. She wants to talk about refinancing. Linda, welcome to the show.
Hi, how are you guys?
Good, Linda. How are you?
I've had better weeks.
Oh, sorry to hear.
Oh, no, thank you. So I have a mortgage that I guess is in a restrained position. It's part conventional, part line of credit.
Mm-hmm.
And it actually came due a couple years ago, but we've been paying religiously at the TD Bank like every month dutifully. But what's happened is some of the payments have been applied to principal and interest, and some of the payments have been misappropriated to lump sum payments. So right now, for all intents and purposes, it appears that we are $8,800 in the red to the bank, and then the bank has agreed to fix it up, and they sort of are strong arming us that we have to refinance. I think before next Saturday. The other day, I had people come from some property services company. They were taking pictures of my house and my daughter's car and license plates, and I didn't realize that was going down. And then when they told me they were there on behalf of the bank, I called the bank and talked to their mortgage people, and they basically strong-armed all our credit. Everything we have was in good standing, but now they've canceled credit cards, lines of credit. They just went.
Yeah, with some of the banks, some of the agreements on actually say that they can roll kind of all of your debt into, or not that all of your debt can be affected when your mortgage is in arrears. So,
but it sounds like this is a bank problem because she's been paying dutifully for.
We are. The bank has acknowledged that, but they still say, well, you should have done this 2 years ago, and but there are a lot of things. There are a lot of mitigating factors why we hadn't.
Yeah.
But the point is we've dutifully always made the line of credit portion and the other portion in person.
Yeah, and have you?
It's basically two different payments, is what it is, right? Because it's that split.
Yeah.
More. Yeah.
Have they given you some dates, Linda? Do you have some timelines? I feel like.
Well, they told me on Thursday that I had until the 27th to rectify it. Otherwise, I'd be back in full default status. And then I attempted to call the TD in Manotick, and then I attempted to call another TD in the neighborhood, and nobody's called me back. And then so I called their 800 number, and then apparently it still appears on their system. Although the bank told me it was corrected, it's not corrected.
Okay, I think your best.
They can't do anything for me. They said before Monday.
Okay, yeah. So I think your best bet is to get to a local bank. Do you know, or bank branch? Rather than the 1-800, do you know which branch your mortgage is at? That's the one I would likely go to.
Oh my God, that's down in Somerset and Melbourne.
Okay.
Well, who cares where it is? It doesn't matter if it's in Toronto. You need to go do it.
Yeah, I would say go do that, but certainly give our team a call. And we can look at.
My husband doesn't want to give TD a cent.
Yeah, I mean, at this point, you want to get
everything he wants to pull.
Yeah, so we want to try and buy you some time and see that it sounds like your situation is a bit complex. So for a solution, I think your best bet is to call our team on Monday and we can start looking at some other options as well for you. TD may end up being the one that is the right one for you if they can make something work. But certainly we have some options that might work, but it sounds like we need to get on it quickly. So you can give our team a call on Monday morning and we'd be happy to do whatever we can to help.
Perfect. Thank you.
Thanks so much for the call, Linda.
Yeah, that's a situation. Now, first of all, in Canada, the banks don't want to own homes, right? Because they're called power of sales in Canada. And when the bank takes over that home, I mean, they don't want to own those homes. In the States, it's a different story, right? Foreclosures, when the bank owns that home, the bank is in charge of doing everything. They got to mow the grass. They got to take care of the home. They got to do everything. Here in Canada, a little bit of different story. They might give you a little bit of leeway, a little difference in Canada, but I would definitely call Sheri and the Mortgage Brokers Ottawa team on Monday to get some help.
Sheri, how do they get a hold of you?
So they can call our number at 613. Now I'm.
You don't even forget your office number.
1973.
Yeah.
What's the one in between there?
Sure.
Oh gosh.
It doesn't matter. We'll remember at the end of the show. You'll remember.
I will remember.
Yeah. Linda, we'll get it on there at the end of the show for you. We promise.
Remember the three numbers.
It's so funny because
Oh my
how
God.
often? I mean, most people are just cell phones nowadays. They're like, what's my office number again? I can't remember. So
I have to pull out my business card to remember our office number because I never phone it.
I know. Yeah.
Yes,
That's
I'm
funny.
sorry about that, Linda. Yeah, no, but give us a call and we can do what we'll do everything we can to help you out. It's something we want to help with.
So that's an interesting scenario there, Sheri, where is that just how the big banks write things into their mortgage contracts? Is there differences with other lenders?
So with other lenders, because some of our mono lenders, that's all they do. Monoline lenders, all they do is mortgages, right? So there's no chance of anything else getting wrapped up in it, kind of thing. So,
right.
But with the banks, and I don't know that I don't want to speak for every bank. I know TD works that way. I'm not 100% sure what the other banks are like, but it sounds like a bit of a complex situation that we need to take a look at.
Absolutely.
Speaking of which, I had a client this week who was a referral from a bank actually, and I just wanted to kind of point out to people that so she was in a bit of a tougher time, and we have some offers that I think people think if you're not at a bank, the next best thing is some enormous interest rate, and it's not. So in this case, I was able to get a lovely client a mortgage for 5.24, not the end of the world.
Not outrageous.
And with a 35-year amortization. So we were able to refinance all of her debt, pull out her payments a little bit more for that 35-year amortization, and get her. So when she looked at the payment, she said, "Oh my goodness, does this cover everything I've been paying? We're even paying out a car lease, so that she can get, so that she can roll that payment in too. So it's going to make an enormous difference for her, even though it's just, it's not an A lender. And some people think, oh, that's what I really need to do is get to an A lender.
As soon as you go off those A lenders, your interest rate's going to be 10, 12.
But it's not enormous.
That's like a point and a quarter more.
It is.
To get yourself out of some trouble.
Yes.
And there's always options, right? That's the beauty is you
Absolutely.
guys have lots of options. So, I mean, this lady doesn't have to stress. Well, I'm not going to say don't stress too much because she sounds like she's in a pickle, but it's fixable. It's fixable,
Yes,
right? So
yes.
so make sure you call Sheri and the team on Monday and see if you can get yourself out of a jam.
At a phone number we
At a
will
phone number that I need
figure
to look
out
up.
Yes.
shortly.
We'll know after the break.
521-8255. We'll be right back. Welcome back. All right, Sheri.
All right, I've
Linda,
got it.
Linda,
And-
we have a phone number for you.
613
Blank. No, sorry, do it again, Sheri.
798 1973. That was the part I was missing.
613-798.
1973.
You got it.
All right, Linda, give them a call on Monday, and they'll see what they can do to get you sorted out. So Paul, I was thinking about that in the break actually. When somebody's in a little bit of trouble on their mortgage, when's a good time to talk to a realtor? Maybe selling the house is the better option.
Sometimes it is, Greg, and it happens all the time where people delay too long, try to figure things out, and before long, the bank has now just slapped your wrist and put the handcuffs on, and they're taking your house. And if the bank has to take your house, put it into power of sale, that's crippling. It is literally crippling for your credit. I mean, good luck trying to get a phone, a credit card, anything that you need credit, because it's crippling. So there's times where you need to get us in sooner than later. We need to find out where you are in that process. Are you on day 1 or are you on day 89? Because once the bank, there's times where we will actually list the property, and let's say we even are potentially getting an offer, and the bank's like, no, sorry, man, like it's too late now. I'm taking your home. Don't get there, because it'll cripple your credit. So get us through the door. We'll assess what day you are, where you are in the process, whether it's smarter to sell that home. Because as much as no one wants to sell their home,
right,
it's advantageous to do that for your credit and your long term than losing your house to the bank. You do not want to lose your house to the bank. So get us in sooner than later. Sometimes as soon as you get that first letter from the bank saying that they're threatening you with this, this, and this, get us through the door, because we know the process, and I'll be able to say to you, you have to sell, or, you know what, let me talk to the bank. I'll see if I can squeeze a little bit of time out of them. And a lot of times we can squeeze some time, but if you don't get us through the door and we're on day 89 now and the bank has already put the handcuffs on, the bank will say to us, we don't care that you're selling the house. We're taking the house. So don't get there. So, Linda, if you are listening, it might be wise to not only give Sheri and the Mortgage Brokers Ottawa team a call, but potentially get us through the door to assess where you are in this process. Because sometimes the bank, depending on who you get, they're not as kind and cordial as they could be sometimes. So, as much as I say...
Nicely put, Paul.
But as much as I say that they don't want to own your house, sometimes they get to that process and it just checks the box where they have to own your house. And you don't want that. So get us through the door before that happens.
Right. And that's a situation where you can get somebody, a professional realtor, mortgage broker, talking to the institution, I assume, and see what can be done, what should be done.
Well, ideally, I get to talk to Sheri and not Frank, but yes. But definitely that's the way it should be. That should go, is that, we would work closely together to see what we can do. And if Sheri and her team's like, you know what, I can bail these people out, well, that everyone wants to stay in their home. So if they can bail Linda out, that is number one. Like, that's what we want. But if they come to us and say, Paul, we can't do anything about this, these people are going to lose this house, then that's where we come in and we take care of that and get them out of the bind, maybe move them on to something a little smaller, to a different house. But at the same time, it doesn't affect your credit. You haven't been, put through the ringer by the bank, and you can move on and get something new, and then eventually move back up to where you are at that point.
Where you want to be.
And also a reminder that if you do think that you're going to miss a mortgage payment, or please talk to your lender before you do that. Always talking to them before is always going to be a better solution. And for people who are in the high ratio mortgages, of course, our default insurers have programs for people who are in financial distress. So also, if Linda's mortgage is with a high ratio mortgage and there's a mortgage insurer involved, there may be some options for her that she can explore too. So
and banks sometimes, I sat here saying how the banks are not lenient and they're cutthroat. But at the same time, they do have some programs like skip a payment type of programs where they will work with you. But like you said, if you call the bank and you're honest with the bank and saying, I'm going through a little bit of a hard time, can I get a little bit of a reprieve? A lot of times they'll work with you. If you just don't pay, they're not working with you.
That's when the legal process starts. And
it's entirely different. Yeah. So it's much better to call them if you anticipate an issue.
100%.
For sure. Yeah, absolutely.
All right, so we mentioned earlier we've got the form on the website, realestateandmortgageshow.com, where you can submit a question. And we got a question in from Doreen this week. Doreen wrote, "Hi, my husband and I are looking to buy a bigger home for our expanding family. We are looking at the outskirts as it could be cheaper versus Ottawa. We thought about Gatineau, but we hear it's not a smart move. What are your thoughts on moving to Gatineau? And also, what areas in the outskirts would be a good place to move for a cheaper price?"
Great question. I mean, this was obviously during COVID. We saw a lot of people moving out when the prices escalated. We saw tons of people moving out to the outskirts. And what did that do? It brought a lot of builders to the outskirts, which did bring some prices in the outskirts up a little bit. So they have been elevated a little bit. And in fact, during COVID, the one area that was the fastest moving community in all of Canada was actually Armpire. Right?
Yes.
You used to live there, Greg.
I used to live there, yeah.
And it's booming. I mean, keep in mind, years and years and years ago, Carleton Place was a little tiny tract. Now it's a blossoming community. It's a city in itself.
Oh, they're building so much out there.
Yeah, and listen, I always say, you get a Starbucks and you get a Home Depot, you've made it. You're your own city, and Carleton Place is its own city now. But that's a great question. So first of all, let's talk about the Gatineau side. I would personally not do that. The only reason I say that is you will get something cheaper on the Gatineau side, but your price acceleration is minimal on the Gatineau side. Meaning, if you bought a house in Ottawa for $500,000, 3 years from now it might be worth $550,000, $560,000. You buy a house for $500,000 in Gatineau, 3 years from now it might be worth $505,000. Like it doesn't go up like it does on the Ottawa side, on the Ontario side. Sorry. So I would try to, if you can afford to stay on the Ontario side, I would stay on the Ontario side. And if you're going to the outskirts, you will get more home for your dollar. That's 100% sure. Now, when she says what areas, it all depends if you like east, if you like south, if you like west. I mean, the west, we got booming areas in Carleton Place, booming areas in Arnprior, Elmont, outskirts of Stittsville. If you go out to the
Richmond,
Richmond's a booming area, big time booming. I mean, you're out shooting photos all the time.
All the time.
And then you go out to the south too. I mean, there's lots of areas out in the south. I mean, Kemptville is like a city in itself now. Cardinal's starting to pick up steam a little bit. You're close to the 401. You're still on the 416. You're not dealing with traffic. And then when you go out to the east, you have some really good areas like Rockland, Limoges, Embrun. Like all those areas you have lots of tract builders. You have lots of country homes. You have lots of opportunity in the outskirts. So if you can't find affordability in the core, in the city, and you have to go to the outskirts, you're still getting a great built home by a great builder. And if it's not a newer home by a builder, there's lots of acreages, there's lots of bigger properties. And a lot of these communities now, you don't have to drive in. You used to have to drive into Ottawa to get your groceries, drive into Ottawa to get your gas.
Right.
Now they have everything. You don't have to leave a lot of these communities. So for affordability reasons, if you have to move to the outskirts, you're better to move to the outskirts on the Ontario side than buy something on the Quebec side. This is my opinion, so when all the Quebec realtors listen to this show, don't jump down my throat. I'm only telling you what my opinion is. I had years and years and years ago, my sister moved to Ottawa. She couldn't afford on the Ontario side. She bought on the Quebec side. She bought a townhouse on the Quebec side. 5, 6, 7 years later, she went to sell her townhome. She literally made no money on it. No money.
No equity by the time it was all done.
No. I know people that have, but she just so you have a better upside if you buy on the Ontario side than you do on the Quebec side, and you're smarter if you can't afford the core to buy in the outskirts of Ottawa than you are to buy on the Quebec side.
Well, it sounds like it's a lot of a lifestyle decision as well. How far are you from work? What do you have to understand moving to the outskirts, and we've seen this. People that moved in COVID to the outskirts are looking to move back now somewhat, and I've talked to them going into. I asked them, why are you selling this beautiful home? Oh, the commute is killing us.
Yeah. And during COVID, when people were working from home,
there was no commute.
So there was only one question we ever got when we were selling homes in the outskirts of Ottawa. Guess what that was?
Does it have high-speed internet?
How's the Wi-Fi? That's the only question we ever got.
Yeah.
And so we had a lot of people moving to the outskirts. We had a lot of people buying bigger homes because families were moving in together, where for the longest time, nobody wanted the bigger homes. No one wanted the acreage. No one wanted all that, country living. Then it changed. People started, moving to the country, buying the bigger homes, moving families in. Now that people are forced back to work, we are starting to see a little bit of a trend moving back into the core, into the Canadas, the Barhavens, the Orleans, those type of areas, Riverside South, Findlay Creek, people moving back into those areas from the outskirts because, the commute is killing them. And you have to do the math. And I know Frank used to say this all the time on the radio. It's like, do the math because you got to pay for gas. Mm-hmm.
Right.
Like, are you saving money by buying on the outskirts when you think of gas and convenience? Or would you be smarter to spend a little bit more into when I say the core, I mean like the Barhavens, the Orleans, the Canadas, those like that's
right. In
more,
the city of Ottawa proper.
In the city of Ottawa proper.
Right.
Are you smarter to buy in those areas and save on gas and save on convenience and things like that? Save on the hour you're killing to drive into work. But also keep in mind, in these outskirt communities, a lot of them are right on the major arteries. So you're driving sort of big roads in the country rather than going through the roads in the city. So
right.
A lot of times you could get to work a little bit quicker if you're, in the country than you would if you're in some of these communities. So it's a preference, but I would try to stay on the Ontario side as much as possible if you can, Dorian. Hope that answers your question. But thank you for going to the website and submitting that question. I know you're shy about coming on the air, and it's perfect for someone who's shy coming on the air, or someone who can't call in or can't listen to the show that week and they want their question asked. What's the website again?
realestateandmortgageshow.com.
Yeah, there we go.
Wow, in unison and everything. Wow, very impressive.
Yeah.
So I have a question for you, Paul, kind of related to this. I have clients who I mentioned last week, actually, who bought in South. I'm going to say Merrickville, but I don't know if it was Merrickville. But they bought first-time home buyers. They bought a bungalow on, I don't know, half an acre lot, that kind of thing. They know it's not their forever home, so they're thinking about selling at some point, but they don't know. So we're talking about when their mortgage matures, how long are they going to be there, that kind of stuff. And two things. He said, I don't know if I'm going to do my roof or my driveway. And he said, I think it needs to be done. I think there's different reasons to do both. Once upon a time when we talked about, people would say, do I get my money back? People ask me this, do I get my money back? And 20 years ago, I would say you almost got dollar for dollar on a kitchen or a bathroom. Now kitchens and bathrooms are pretty expensive. So I don't know if you're at dollar for dollar on bathrooms and kitchens, but what do you say to somebody who says, should I do my driveway? Should I do my roof?
So those are things that have to be there and have to be done. However, the return on them isn't quite as great. For example, if you have to go spend $10,000 on your roof, what that does is it makes your house more attractive amongst the competition. But will you get $10,000 back? I know one thing's for sure. You'll probably get an offer quicker. You'll probably sell quicker, which will probably put more dollars in your pocket because you have a brand new roof. If you're comparing your house to another house that has a 20-year-old roof, most likely, as long as we're comparing apples to apples, they might look at your house before that other house. However, you spend that money on a roof and you expect to, it's not like you're putting in hardwood floors. Like, that's an upgrade. That's a tangible upgrade to the house. Putting in your new windows, your new roof, your new furnace, those type of things.
Those are expected.
Those are expected, right? So those are things that, it's attractive. They'll sell quicker. You'll get a better dollar for your house. But it's not a tangible upgrade like a kitchen, a bathroom, light fixtures, paint, even to an extent landscaping. We always had the old question too about a pool. If I put in a pool, it's $100,000 nowadays for a pool. Am I getting my money back? And I said, well, listen, if you have a family who's desperate for a pool, there's a good chance you're getting some of that money back. But what if you have a family with really young kids and you're scared to have the pool there and the pool to you is irrelevant? So that $100,000 upgrade is irrelevant. So do they have to do the driveway? Yeah, they do if they want to get their home sold quicker and for more money. But will they spend a lot of money on that driveway and will they get that money back? Probably not, but they might get it back on the sale price because it's going to sell quicker because it shows better and compared to other properties, especially in the outskirts.
Not carrying it as long,
which means if you can get your home sold quick, most likely you're getting a top dollar for your home. If your home sits on the market for 3 weeks, 4 weeks, 2 months, you're not going to get quite as high as a dollar. So you might get your home sold quicker, which will put more dollars in your pocket. So the upgrade's great, but don't go put a roof on and say, I'm going to put this on to sell, and I'm putting $10,000 into
plus
it.
$10,000.
I'm now going to up my price by $10,000. You cannot do that. You just can't.
So Sheri mentioned that these were first-time home buyers. This isn't their forever home, correct?
Right.
Right. So does it make a difference in terms of the market that you're in? If you're selling a first-time home buyer product, does it make more of a difference versus a more mature buyer product?
Well, yes and no. So obviously the more mature, bigger product's going to cost more for a roof and a windows and all that kind of stuff. But saying that, first-time home buyers don't have the disposable income to do things like a roof. So it is more attractive, right? It's like, do you sell your house with appliances? Well, if you're a first-time home buyer product, first-time home buyers don't have $10,000 to go put in a fridge, stove, dishwasher, all that kind of stuff. So it becomes more attractive to include the appliances. I was in a house this week and someone's like, do I finish my basement to sell? And I said, okay, well, you're about a 2,400 square foot home. You have a main floor family room, main floor living room, main floor dining room. I wouldn't finish your basement. Now, if you're in a tiny little home that someone who's buying this is like, well, where do my kids go to be entertained?
Right.
They're going to be sitting in my one entertainment room. I need them to be somewhere else. Maybe it's more attractive to finish that basement when you're thinking of selling your property. So it all depends on where you are, square footage, what type of product, and who is buying your property, whether you do some of these renovations. But the one thing I will tell you, if somebody comes in Merrickville, beautiful area if that's where they are, But you know what? You will see a lot of people that are first-time home buyers moving out to that area because it's more affordable. So if you have a 25-year-old roof and shingles are starting to curl, that product is not attractive for a first-time home buyer because all the first-time home buyer sees is dollars, right? So I would probably do my roof in that circumstance. But keep in mind, now you worry as a buyer, if someone's doing their roof to sell, they're most likely putting the cheapest shingles they can possibly find on that roof, right?
So there's pros and cons to it.
There's pros and cons. As a buyer, I'd probably say, I'd rather take 10 grand off the price and let me do the roof so I can put my 35-year shingles on there.
Right.
So it all depends where you are, what product it is, and you know, how square footage of your home and the price of your home as well, whether you should do some of those repairs. But one thing I will tell you, get a realtor in before you do anything, any type of repairs.
521-TALK, 521-8255. We'll be right back. Welcome back. So, Sheri, we've been talking over the last few months with 2026 coming up. There's a whole pile of mortgages coming up for renewal. Got some rate decreases here, but there's people going from some pretty low rates, and they're looking at refinancing at some higher rates. Are their payments going to double?
So, you know, this is a common misconception right now. I think people are calling expecting to have these unbelievable increases that people are really worried and losing sleep about this. And I would really encourage people to call their mortgage professional and find out before they start losing sleep. A client this week I talked to, their rate is going from 1.89 to 4.09.
So you'd think it would double their payment.
Oh my God.
Yeah. More than.
Right? And they're going from a payment of $826 to $978. So that's not nothing.
Yeah.
But it's, when I looked at over the course of a year, it's probably more than your income has gone up, or less than, I should say, your income has gone up over the last four years, probably substantially less. It's really not as big of a jump, even though those interest rate numbers look like they're so much bigger. It's not. This is a great time to be in the housing market. It really is, with the inventory that's in real estate available right now. If you're thinking about entering the market, this is the time you really should be. This is a good rate time to be going in. Absolutely.
Yeah, our rates are coming down, and let's be honest, we have people coming off some really attractive rates.
Well, 1.89. Whoa.
In the next 2 years, it could be a bloodbath. But you just said, how bad was that? 150. It's a lot for some people, but it's not crippling. So yeah, inventory's through the roof. Rates are coming down and somewhat attractive now. Prices are still attractive. We've come down to a point where things are starting to be affordable. So it's just a great time to buy right now in the Ottawa market because there's so much inventory.
Well, what was the numbers? We just did the August numbers. Yeah, a couple of weeks ago.
Yeah.
What was there? 4,100 properties on the market.
There is 3,971.
Yeah. So there's lots of choice for buyers right now.
Tons of choice for buyers right now. There's lots of inventory. Comparables instead of having 3, 4, 5, there's, 12, 13, 14, things like that. I know we have to go, and I know we have some birthdays, but we did have 2 people call in. Go to the website, realestatemortgageshow.com. Teresa, we will get to your question next week because it's a little bit a longer one and we don't have the time. So, Teresa, thank you for the question. It was about hardwood floors. Are they here to stay? Things like that. Great question, and I will answer that next week on the show. And then, of course, sorry about my glasses being like this, but we do have, one of our loyal listeners and friend of the show, Mike Carasetto, sent in a question saying, don't forget, if you buy on the Quebec side, house prices may be cheaper, but taxes go way up. Depends on your income level, of course, but most levels of income are more highly taxed in Quebec. Gas prices are a bit higher, too. Now, he does put in there, though, the good news. The Beer King has cheaper cases of beer on the Quebec side. So thank you for that, Mike. There's no question there, but you are right. And then, Teresa, your question, like I said, will take a little bit longer, so I will answer that next week on the show. But keep those questions coming because it's absolutely wonderful that we're getting those questions.
Awesome. Sheri, birthdays this week.
We have Brent Babcock, one of our commercial specialist agent. He's down on the Seaway celebrating his birthday today. So happy birthday to Brent. We also have next Saturday another Italian name I'm going to do my best on, Luca Giorgio, I think.
Frank would have done that so much better.
Frank would have nailed that.
Yeah.
He's coming up next Saturday, so I don't know who's going to be on next Saturday. And my son, Ethan, is turning 23 next Saturday. And one of my besties, Christy, I won't tell you how old she's turning, but it's her birthday next Saturday, too.
Amazing.
Yeah.
We have a very special one who's very, very special in our company, Kathleen Graham, who's our listing coordinator, who's just a wonderful woman. She has her birthday on Wednesday. So happy birthday, Kathleen.
Happy birthday, Kathleen.
Yeah.
Kathleen and I work together so much, and she's just the best. I love her to pieces.
Well, you know what? So Petra's in the studio. My girlfriend Petra's in the studio, and she loves Kathleen. So she actually said to me, don't forget Kathleen's birthday.
Don't you
And
dare.
I said, I will not, for sure. So
Any questions, give us a call next week, and don't forget realestateandmortgageshow.com. Have a great week, everybody.